everyone, and thanks for making the time to come to our first Mind Speak of 2019. It's a pleasure to see you all here and to have such a fascinating subject to discuss. Simon Bransfield-Garth is the CEO of Azuri Technologies, which is a play on the Swahili word Azuri. Served as the CEO of 819 Limited, previously CEO of Cellprept Limited from January 2009 to October 2010. 20 years of experience in building technology-based companies. Was Vice President of Global Marketing at Symbian, Managing Director for Europe, served as Chief Marketing Officer at Carrier IQ, began as a founder and Managing Director of Myriad's Solutions, later acquired by Synoptics, seasoned manager from the mobile telecoms industry, but right now he serves as an advisor, as a member of the advisory board for Destinated Technologies, and has a PhD from Cambridge University, and also is a chartered engineer. What I found interesting about Simon is not found in his CV. It's actually the philosophy that he's espousing with relation to people who are at the village level. A person sitting at the village does not have to come to the city to participate in the 21st century economy, and can do it from the comfort of their own home, wherever they are. And that, I think, is an economic revolution that is about to really happen, and is happening in many cases. And I think it's a privilege today to have Simon here with us to explain to us exactly what type of revolutionary he really is. Simon, over to you.
Good morning, everybody. My name is Simon Bransfield-Garth. I'm CEO of Azuri, and I'd like to welcome you all to this MindSpeak event, and to thank you very much for taking your Saturday morning to come and to listen to what I hope will be an interesting discussion, and later on have an interactive session where we can talk about some of the issues that we're discussing today. So really, the presentation is in two parts. The first part is all about the individual. It's all about how can we bring technology to make the lives better of people who don't have access to many of the things that you and I take for granted. But the second part of it is, how does that then have an impact on the broader economy of the country? Many people have talked about how energy has an impact on the individual. Very few people have thought about how that impact then rolls up into the broader economy. And hopefully today will be a stimulating discussion to see how that might be done. Around the world, there are still something over 1 billion people who don't have access to electricity. It seems very strange. We're in the middle of Nairobi. I can get a 4G signal on my phone. I can stream a video. That's absolutely fine. But I don't have to go very far before I see something like this, where individuals have no access to basic facilities, no access to electricity, to sanitation, to water. And we still have individuals who are using kerosene lamps and candles to be able to light their homes. And that is a problem both at a human level, but it's also a problem at an economic level. There are something over 600 million people in sub-Saharan Africa who don't have access to grid electricity. And unlike the rest of the world, the population of sub-Saharan Africa is still growing very rapidly, somewhere between 2 and 3% per year. So there are anything up to 30 million people coming into the continent every year. And today, the rate of electrification is slower than the rate of population growth. So the number of people who don't have access to electricity in sub-Saharan Africa is actually going up. It is not going down. But it's also an economic challenge. When you sum up all of that money that people have to spend on really very inefficient alternatives, candles, kerosene lamps, traveling to the market to be able to charge a mobile phone, that sums up to about $25 billion annually. That's $25 billion that low-income households are spending largely unnecessarily on things that frankly don't deliver what they really need anyway. So there is a smarter way of doing this, where instead of having that money being spent on very inefficient ways of working, we can use that money to provide much more efficient ways of delivering household quality to people who don't have access to electricity. When we think of power, when we think of electricity, the first thing that comes to mind is something like this. This is a coal-fired power station. And in the traditional view of power, it starts with a centralized power station. You then have the grid, which distributes that power out into the economy. And then people can extract as much power as they want, or as much power at least as they're able to pay for in their household. And that works reasonably well in high-density environments, and it works reasonably well in very high-income economies. But it really doesn't work well in rural sub-Saharan Africa, where economic levels are lower and where the distance between households is much larger. So I'd like to introduce you to a different type of power station. Now that may not look a whole lot like a power station to you or I, but actually, if you look closely, you've got a calculator, and in the top right-hand corner of that calculator, there is a small solar panel. And that solar panel delivers just enough power to be able to power that calculator. You can't power a kettle off it, you can't run your TV off it, but it's got just the right amount of power for that device. So how about we think about energy in a totally different way? How about we think about energy, instead of saying we have this socket in the wall that can power anything, that every device comes with its own power station that provides enough power to power that device. So when you get your lights, they come with power. When you get your TV, they come with power. When they get your fridge, it comes with power. All of your devices come with their own power. And working that way, you no longer have to have this centralized infrastructure to provide energy, because every single device is self-driving. And that is the fundamental basis behind the work that Azuri does. We provide solutions which are complete to the customer. So out of the box, you open it up and it works, and it doesn't rely on having any other infrastructure around it. The traditional challenge with that sort of idea has been that, in effect, what you're doing, instead of buying energy, you're buying your own power station. And buying your own power station requires capital. But we all know that capital is a very difficult thing, particularly for people who live in rural communities. And so in 2010, Azuri was one of the pioneers of a technology called pay-as-you-go. And pay-as-you-go is a mixture of providing a service and providing an asset on a rent-to-own basis. So what happens is a company will bring a piece of equipment and put it in your house. So in this case, there is a solar panel that goes on the roof. There is a yellow box which contains all the technology that you need, including the batteries. And then there is a series of lights, radio, what other devices might be connected to that unit. And the instant that that device is put in, it doesn't work. It doesn't do anything. In order to make it work, the customer makes a small payment. So that device is put in free of charge or for a very small fee. And the customer makes a small payment over M-Pesa, and that gets a code which unlocks that system for the period that the customer has purchased. So in the case of a lighting system, that will be about $3 per week, 300 shillings per week, and that gives a code which will enable the system for 1 week of use. And at the end of that 1 week of use, the system shuts off, and the consumer then puts in another code, and you get another week and another week. And after about 18 months of those weeks, that system has been paid off, and the user gets a special code which unlocks the system forever, and the user doesn't have to pay any more money ever again. So it's a way of being able to combine the idea of paying for what you're using at the same time as buying the capital asset. Now, the neat trick about this one is that the cost of the solar home system is less than the cost of the kerosene and the mobile phone charging that it replaces. So as far as the end consumer is concerned, the product is net free. And after 18 months, there are no longer payments that need to be made, and then the consumer can continue to use that product for a long period of time. So these sorts of products were introduced in 2011, and they've been extremely successful. And now that market is moving on well beyond that initial vision of being able to provide light at night. So imagine a consumer in a rural village, and imagine that that consumer buys a small solar home system such as the one that you see on the left. Over the period of time that that customer is paying for that system, on average, the customer will increase their income by a significant amount. And what happens is that when that customer finishes paying for that system, over half of them will immediately put down a payment on the next system, the bigger system. And that bigger system may have a television, so in this particular instance, it's got a 24-inch television, it comes with 60 channels of content from Zuku, and that will work wherever you are. That will work in the middle of Nairobi, it'll work in the middle of Turkana where there is no electricity or any other kind of infrastructure. And what those devices are doing is not only providing the individual asset that we're talking about, individually providing a television, individually providing a smartphone or whatever. It's providing a gateway for that household to the knowledge economy. That television is the first access that that household has had to modern media. It's the first access that household has to pictures, providing news, entertainment, information, and so on. And one of the things that was very surprising to us is that a television also increases household income. Now you might think that's a bit odd, but on average, households increase their income between 10 and 25% in the first year from having a television. Now why is that? Well, there's a number of reasons. One reason is that individuals get access to information that previously they didn't have. Azuri did a partnership with Shamba Shapeup, which I'm sure many of you know is an agricultural program in Kenya. And according to Shamba Shapeup, 40% of viewers have changed their agricultural practices as a result of things that they've learned by watching Shamba Shapeup. And so what we see is that people, by having access to television, have access to information which enables individuals to improve their lives, improve the way that they operate on a day-by-day basis. But what it also does is it provides access to the knowledge economy through devices like smartphones. And through that knowledge economy, we're able to deliver a whole series of services which weren't previously available to those consumers. One example of that, and you'll hear about this later on, is an insurance product. Now, insurance is not something that is routinely found in rural communities. And from an insurer's point of view, there are large numbers of relatively low-cost insurance products. But the insurer has two challenges. The first one is, how do you actually get that product to that customer? It's a low-cost product. It's not cost-effective to take that product to each individual consumer. The second one is, if you've got an insurance product that costs perhaps 25 shillings a week, how do you go and collect that 25 shillings a week? Again, it's not cost-effective to have somebody literally go round and collect 25 shillings a week. But of course, if you've got a TV in your system or you've got a lighting system in your house, that customer already exists. That customer is already making a payment once a week. So adding 25 shillings onto the amount that that customer is paying makes no difference. So now, with the PayGo technology, a whole series of products and services that are available to people in urban environments, available in that mainstream world, are now becoming available to rural consumers. And over time, we see that extending beyond insurance, beyond fast-moving consumer goods, into e-education, e-health, and other important aspects, which will enable people in rural communities to really get many of the benefits that otherwise you might expect only existed in urban areas. And we call this the services spiral. This is a progression where you get a positive feedback mechanism, where a customer is able to get technology which leads to increased income, which means more technology, which means more income, which means more technology. And people go up that services spiral surprisingly quickly. So households that in 2010 were really delighted to get a single solar lamp are now sitting at home watching a 24-inch television with 60 channels of content. Totally different to where people were 5 years ago. And these are examples of the sort of households we're talking about. These are traditional households in rural areas, but we also have people in peri-urban areas who similarly use that sort of technology. So this sort of technology is not just an incremental change on individual households. This is transformative to individuals in rural areas. And what we've seen over the last 5 or 6 years is the impact that that can have on individuals. We've seen that on average, children study between 60 and 90 minutes extra every single day. We've seen people who keep their stores open for longer. We've seen people who grow their crops in different ways. We've seen people who choose to do new things because they've seen things on television which have inspired them to go out and try new ways of working. So I think we've established very well over the last few years the impact on the individual household. But an interesting question is, what would happen if you were able to roll that out across the wider community? When you talk to economists, there's a very, should I say, traditional view of how economic development occurs. And it broadly goes like this. At some point, productivity which has been developed in the Western world comes into the center of cities. And large companies, be they IBM or Google or whoever it may be, sets up shop in the middle of a city and brings those productivity learnings to individuals in those cities. And income levels in those cities grow, and eventually somebody at the far end of the country will benefit organically by some of that development. And there is some truth in that. But we'd like to suggest that actually there is a radically different way of thinking about economic development that can also have a dramatic impact on the way that countries develop. So today, as I mentioned, there are something over 1 billion people in sub-Saharan Africa who don't have access to electricity. And the population is expected to grow to around 2 billion by 2050. So there are about 30 million people coming into the labour market in Africa every single year. But actually, when you go look at it, there are only 5 to 7 million new jobs being created every single year. But we don't see 25 million people who are starving. Why don't we see 25 million people who are starving? Because those 25 million people are in an economy. It's just an informal economy. It's not working for IBM in the middle of Nairobi. It's growing crops, it's running a boda, it's whatever it may be. And so how does that then map out over the next 10, 20, 30 years? In a traditional economic view of the world, there is a view that this demographic dividend, if you like it, this large number of people who are potentially employable, then brings labour rates down within the African subcontinent, which means that labour will transfer from other places into the continent. And to some extent, that will happen. But I'd like to suggest that the transition that we saw from labour in the US and in Europe over to Asia is not going to repeat itself from Asia into Africa. The fourth industrial revolution and the development of artificial intelligence means the number of jobs which are out there is reducing. And what we're seeing in Asia is not exporting of jobs, it's seeing increasing mechanization and increasing industrialization. In fact, in many factories, a robot will pay for itself in 12 months in Southeast Asia. So I predict that we're not going to see millions and millions of conventional manufacturing jobs transferring from Asia into the African subcontinent. So the question then is, how does the continent develop? And how do those 30 million people every year find useful, gainful employment that really allows individuals to develop and allows the economy to develop as well? When you look at the demographics of the African subcontinent, a very large proportion of economic activity is actually in this informal sector. For Kenya, it's roughly 3/4 of the economy. And roughly 3/4 of the growth in the economy is also in that sector. If you actually include agriculture in there, it's getting up to 80 or 90% of the economy is in that informal sector. And when we talk about the informal sector, what do we mean? Well, we mean things like this. Or we mean things like this. These are individuals making a living, but outside the conventional, I go to my office, I get paid a salary every week type of view of economics. And these are exactly the customers who are people who don't have access to grid electricity. So there is an inherent tie-up between individuals who are in the informal economy and people who don't have access to basic services. But as we've seen, the economy is not being driven by IBM in the middle of Nairobi. The economy is being driven by exactly these individuals. And so by driving improvements in the productivity of individuals in the informal economy, interesting question, how much impact can we actually have on the national economy by taking a strategy along that line? Azuri has been working for a while on this question, and we've been working with a number of academics around the world on this activity. And I think I'd like to draw a parallel between how energy has developed and how economy has developed. You remember a little while ago we talked about the development of energy. We talked about this idea of centralized energy where you have a power station. And then that becomes more decentralized as you have the grid, which takes it to individual places. But with individual energy for each individual device in each individual household, what you've got is distributed energy, where energy is uniformly available right the way across the country. It doesn't matter where you are, it doesn't rely on other infrastructure, it just exists. Well, we see a very interesting parallel to that with the economy. You'll all be very familiar with centralized economies, which are very driven from the center. And you have other economies which are a bit more decentralized, where opportunity exists in many different places, not just in one individual place. But Azuri believes there is a thing called the distributed economy. And the distributed economy is a vision of the world where opportunity is the same. It doesn't matter where you are. It doesn't matter whether you're in the middle of Nairobi or in the middle of Turkana, you still have the same opportunity. Now, why is it that conventional economics doesn't think of the world like that? Well, conventional economics really relies on the power of proximity. It basically says that cities are more productive because people are close to each other, and so you generate more economic activity because everything is self-reinforcing. But all of that economic theory was written before the internet. And the internet essentially provides instant proximity. It doesn't matter whether I make a tweet here, or I make a tweet in New York, or I make a tweet in Ethiopia, it's a tweet. It has exactly the same impact. It doesn't matter what the physical distance is. And so by providing access to these underlying capabilities of power, of connectivity, of information, of entertainment, and of knowledge, we're able to bring many of the services that people would expect in cities into rural areas. And many of those services are going to be delivered very differently to the way that they've traditionally been delivered. So instead of having everybody going to a physical school every morning, actually, many people may get some of their education via their television. Instead of necessarily going and physically visiting a doctor every single time you need something done, many people will have access to e-health. Products will get delivered using drones. We'll have access to finance products. We have access to media products. We have access to a whole range of different things, which mean that individuals in rural areas have many of the opportunities which are currently expected only to be in cities. So how does this then play out to governments? Because if you talk to a government about an informal economy, normally the general view is actually that's not a very attractive thing. It sits outside the taxation system, it's not really terribly well controlled, and actually very few governments have a strategy to drive the informal economy. But we would argue that that's a mistake, because the reality is that the growth in the economy is happening in that informal economy. So rather than stifling the informal economy, let's figure out how we can not only grow the informal economy, but also blur the boundary between the informal economy and the formal economy. Let me give you a couple of examples of that. So I'm sure many of you have taken boda rides in the past. And imagine that I've got a motorbike and I'm a motorbike taxi owner. In the absence of anything to centralize that, I spend much of my day hanging around the market waiting for somebody who wants to go and take a ride. But today we have applications like Safe Boda, equivalent of Uber for motorbikes. And on average, bike riders improve their income between 30 and 40% when they get access to Safe Boda. Because what that's doing is that's getting rid of this problem of finding your customer, and it's enabling you to become more productive. Similarly, by providing a solar-powered irrigation pump to a rural farmer, it's possible to increase yield by up to, or at least increase income by up to 10 times in a year. How does that work? Well, imagine that you are growing crops, and imagine that you have rain for one season a year. And there are 2 seasons a year where you don't have rain. So in the rainy season, you grow a high-value crop, tomatoes, capsicums, whatever it may be. But actually, in the dry season, you're growing maize, you're growing other products which are relatively low income. A solar-powered irrigation pump effectively allows it to be the rainy season 3 times a year. So you can grow your high-value crops 3 times a year instead of once a year. But it's also the case that those high-value crops are worth more in the off-season than they're worth in the on-season. And so we have many examples of farmers who've increased their income by a factor of 10 as a result of having simple technology like a solar-powered irrigation pump. So how does this then tie together the informal economy and the formal economy? Well, let's go back to that example of that boda driver. That boda driver is operating in the informal economy, and generally, government and other organizations don't have direct access to that individual boda driver. But absolutely, government has access to the organization that is coordinating that boda driver, be that Uber, be that Safe Boda, whoever it may be. And so it's possible through regulation, through taxation, to be able to work with those organizations that do the aggregation to enable the informal economy to drive the economy, but still bring them by proxy into the mainstream economy. And that enables safe working practices, that enables taxation, enables centralized reporting, and provides a really efficient bridge between the economic growth that is possible at the individual level in the informal economy and the broader, wider economy. So the interesting question then is, imagine that you were to take this technology and you were to roll it out. What is the sort of order of magnitude of impact that we could have in that circumstance? So we've done some work with a very well-known consultancy called Vivid Economics, and we've been looking at this as a piece of primary research. First thing we did was to compare the size of the market in 2030 to the size of the market today. And what we did was to look at the cost of solar home systems today and the affordability of those products today, and look at the affordability of those products in 2030. And what we found is that the addressable market for these sorts of products today is about 22 million households, and that grows to about 100 million households by 2030. So essentially, by 2030, every single household in sub-Saharan Africa has enough money to be able to buy a solar home system of some kind. So now for each of those solar home systems, let's go and make some reasonable assumptions about the economic impact that that might have. And this economic impact actually occurs in 2 parts. There is the direct income impact, but there is also the welfare impact. And so in order to look at the economic impact, we use the figure of GDP, or gross domestic product. Gross domestic product is perhaps not the best measure, but it is at least a measure that everybody understands. But one of the challenges with gross domestic product is it measures how much you spend on things. It doesn't measure what you get for that spend. So if you imagine that I'm a household and I'm spending $5 a week on kerosene and mobile phone charging, and the following day I get an Azuri home system which provides me with a television, with light, with radio, with a fan, with a whole variety of other things, and I'm still spending $5 a week. As far as GDP is concerned, nothing has changed. But clearly the welfare of the household with all of that technology is vastly superior to the household that didn't have that technology. So what we've done is to do 2 calculations. The first one is, what do we believe is the economic impact on the household? And the second one is, what do we think is the value, the fair value of the welfare impact that the technology has brought to the household? And we've aggregated that up to go and see what that would do to GDP. And these are the figures. So this is taking 10 countries within sub-Saharan Africa. And you can see that the green is the economic GDP impact, and the blue is the welfare impact on the household. And we wrap that up as a dollar figure, and we've compared that to today's GDP of those individual territories. And what you can see is that the potential GDP income, the income impact, the bit that you can measure, varies between about 4 and about 16% improvement in national GDP. If you look at the welfare impact, it's even higher. It's going from about 5% up to about 28% improvement in GDP. So this is really quite stunning data. What this is saying is that the economic model of all development starting in cities and then finding its way eventually out into rural areas is not the only economic model. There is also an economic model which is about bringing technology to rural areas, improving the effectiveness of the informal economy. And if you do that broadly across that number of households, the impact that that can have is measurable in comparison to the development that you might expect by urban development alone. And this data is simply based on the effectiveness of a solar home system. It doesn't take into account all the other benefits, all the other services that potentially could be delivered to those consumers. So Azuri has been partnering with a large number of different organizations to bring capabilities to consumers that Azuri of ourselves are not able to do. So our televisions are powered by Zuku, providing 60 channels of TV and 20 channels of radio, irrespective of where you are in the country. As you'll hear later, we've been partnering with Unilever to bring consumer goods, fast-moving consumer goods, to people who have access to electricity. So in that particular instance, we partnered to bring sunlight washing powder to consumers who are getting pay-go solar power. So not only are people getting clean energy, they're getting clean clothes. People are getting access to many of the services that previously they wouldn't have had access. And we've also partnered with APA Insurance to bring insurance to individuals in rural communities. The proportion of people in rural communities who have insurance today is extremely low. And that means that households are very susceptible to financial shocks. By bringing appropriate insurance products to those households, we're able to allow those households to ride out those shocks, be they crop shocks, be they health shocks, a whole variety of shocks, which enables people to be more confident in their future income levels and therefore be able to plan over a longer horizon than otherwise they might be able to do. So by bringing these services in, we're doing a lot more than just delivering energy. What we're doing is we're delivering the modern economy to rural consumers. And there are really 3 keys to making this work. And these are things that Azuri has focused on over the last 10 years nearly. The first one is product innovation. The conventional way of doing stuff is not the future way of doing stuff. Azuri has focused on extremely efficient, low energy, high performance devices. And in fact, we're the only company that has artificial intelligence in every single one of our solar home systems that we go and sell. So if I imagine I go home to my house in the UK and I go and switch on the light in the kitchen, I'm using a mechanical switch that Edison would have understood 200 years ago, no problem. I speak to my customers in Tanzania. They have a modern solar home system that has artificial intelligence. The technology in that hut in Tanzania is hugely more advanced than the technology that I have in my home back in the UK. The second part of it is distribution. Consumers who are off-grid are inherently difficult to reach. And so Azuri has partnered with local companies, powerful local companies, in order to be able to get that distribution reach and to be able to get those products into those consumers. And the third one is asset finance. Every time Azuri places a piece of solar home equipment into a house, that is a cost to Azuri. And that money gets paid back over a period of time. But the faster we grow, the more money we need to be able to go and put those products into the households. And 5 years ago, that was a limitation to the growth rate of the market. Azuri has been working very closely with a number of major financial institutions. And I'm very pleased to say that we now have what is known as asset-based finance, which means for every single system that we put into a household, we are able to finance that system purely based on the customer receipts that we're expecting from that system. What that means is there is no asset finance limitation to the rate of growth of these technologies. If you look at the mobile phone industry, there are quite a few parallels between the pay-go industry and the mobile phone industry. The mobile phone industry grew at an average rate of about 65% over 20 years. The pay-go industry so far has grown at an average rate of about 100% over the last 5 years, every single year. And the key with that is to continue that growth rate as we get into genuine scale. And it's by having this combination of asset finance, of distribution, and product innovation, which enables us to keep that growth rate. So these are the sorts of individuals who are taking advantage of this new technology. Keeping a store open late at night, setting up a business to provide clothing or whatever it may be, or farmers using pumps to irrigate land in places that are well away from water sources. So finally, I'd like to leave you with a couple of thoughts. The first one is the way that technology is evolving in sub-Saharan Africa. We're all very familiar with the idea of technology usually starting off somewhere in California, and eventually it finds its way over here. Well, this is a really fascinating example where technology is starting in sub-Saharan Africa and will eventually find its way into California. And the second thought to leave you with is don't ignore the rural consumer. Conventional economics focuses on the urban elite, but the economy is driven by the rural consumer. And by putting a genuine focus on the rural consumer and the benefits that can be brought to that consumer, we can genuinely have an impact not only on the lives of the consumer, but actually on the broad economy as a whole. Thank you very much.